Hello everyone. Today I'll be presenting a strategic financial and market analysis of Hilton Worldwide Holdings. In this presentation, I will focus on Hilton's financial performance, growth strategy, risk, and competitive position in a global hospitality industry. In this slide, you can see the roadmap for today's presentation. First, I will give a brief overview of Hilton. Then I will discuss key findings from the financial analysis, balance sheet trends, and the important financial ratio. After that, I will explain Hilton's cost of capital, market position, risk, and finally share a recommendation and the conclusion. Moving to the next slide, this slide provides an overview of Hilton Worldwide. Hilton was founded in 1919 by Conrad Hilton, is headquartered in Virginia, USA. Today, Hilton operates more than 8,400 plus properties across 140 countries and territories. The company has 24 well-known brands including Waldorf, Conrad, Hilton Hotels and Resorts, and the Hampton by Hilton. Hilton also runs one of the strongest loyalty programs in the world. Hilton honors within 180 million active members. Now, moving to the key findings from the financial analysis. First, look at the asset. Hilton follows an asset-light business model. Cash as a share of asset declined from 19% to 7.9%, showing efficient use of capital. Most assets are intangible such as a brand and contract, which allow Hilton to grow without owning many properties. Next, looking at liabilities and equity. Long-term debt remained stable at around 10.5 billion. Share buybacks increased significantly, leading to negative shareholder equity. But this is a strategic decision to maximize shareholder return. Now, in this slide, we look at the ratio analysis. The ratio analysis declined from 1.73 to 0.70, which is normal for an asset-light company. Efficiently improved with the asset turnover increasing from 0.26 to 0.70. Leverages remains high but controlled, and interest coverage is a healthy at 4.16 times. Profitability also recovered strongly, with ROA improving 9.3%. Now, moving to the cost of capital. Hilton's weighted average cost of capital, also known as a WACC, is at 12.04%. This represents the average return Hilton must earn to satisfy both debt holders and equity investors. The cost of equity is higher because of market risk and financial leverages. At the same time, the after-tax cost of debt is relatively low at 4.40%, which shows the strong credit quality. Therefore, Hilton should invest only in a project that generate return about 12.04% to create value for shareholders. Now, looking at the SWOT analysis, Hilton's strengths include strong global brand recognition, a loyal customer base, and an effective asset-light business model. Its weaknesses include high leverages and a smaller luxury portfolio compared to some other competitors. There are strong opportunities in a lifestyle, hotel, luxury expansion, and the emerging market. However, Hilton also faces threats such as an economic uncertainty, intense competition, and changing travel demands. In this slide, we focus on important metrics from an investor perspective. The times interest earned ratio shows that Hilton can comfortably meet its interest payment, which indicates low financial risk. Return on asset highlights how efficiently Hilton uses its asset to generate profit. Asset turnover shows strong revenue generation from lean asset base. Overall, this key performance indicates support strong investor confidence in Hilton's financial position. Moving to the competitive landscape, Marriott leads the market in overall scale and has a strong presence in a luxury brands. Hyatt and IHG focus more on lifestyle and boutique hotel segments. Hilton's competitive advantage lie in the strong brand loyalty, advantage digital tools and operational efficiency. However, expanding in luxury brands and emerging market remains an important growth opportunity for Hilton. Further, looking at the risk and external pressures, Hilton faces risk from global economic slowdowns, inflation, and changes in the interest rates. The company is also highly exposed in the North American market, which increased regional risk. Therefore, effective management of leverage and liquidity will be important going forward. Now, moving to this slide, we look at the strategic financial decision behind Hilton's growth. First, Hilton is investing heavily in a digital transformation, such as a mobile app, digital check-in, and data-driven customer experience. This improves efficiency and strength customers' loyalty. Second, Hilton focus on a high growth market, especially in emerging regions where travel demand is rising. This allowed the company to expand globally without owning many properties. Finally, Hilton follow strong capital allocation practices. It carefully allocates capital between growth, investment, debt management, and a shareholder return. Together, this strategic decisions support sustainable and scalable long-term growth. This slide explains why Hilton is an attractive investment choice. First, Hilton has a strong global brand recognition worldwide with a loyal customer base. This provides stable demand across different economic cycles. Second, Hilton shows consistent financial performance supported by its asset light model and strong operating efficiency. This helps generating reliable cash flow over time. Third, Hilton is focused on ESG initiatives, including sustainability, social responsibility, and governance practices. This makes Hilton more attractive to long-term investors who value responsible growth. Overall, this factor make Hilton a strong and reliable investment option. In this final slide, I will summarize the key recommendation. Hilton should moderate stock buybacks to strengthen its financial position and improve liquidity, maintaining strict weighted average cost of capital, discipline and essential for a future investment, expanding luxury and lifestyle brands and entering emerging market will support long-term growth. Increasing direct digital bookings will improve profitability and reduce dependency on third-party performance. In conclusion, Hilton is a scalable, fee-driven global brand platform built for sustainable growth. Thank you.